Good morning and welcome to the FP Markets Daily Market Update. Coming to you live from Sydney. As you can probably see from my screen, it's not actually morning, but it should be morning for those guys waking up for the European session and what proves to be a fairly interesting one ahead. So movements in the market again, which is really like this volatility is really cranking up. We've been talking about it for a few weeks, and certainly investors are looking at several trading opportunities at the moment, and they're coming across the board. So they're coming across stocks, they're coming across interest rates, and they're coming across commodities and currencies. Not unexpected, I suppose. So interesting today here, and even a bit of disparity down under over here. So ASX 200 having a little bit of a perky day against the run of play, it has to be said. So nearly 0.8% up, $2 down from us here in Bridge Street, 0.78% up for the ASX. That going well with sort of a little bit of perky moves from the miners and some of those commodity sectors, whereas everywhere else across the board, negative numbers. So US sort of finished well on the back foot. Rest of the Asian bourses similarly following that sort of sentiment. As you can see, they're Hang Seng down just over 1%. The others not taking as much of a hit, but certainly sentiment sort of on the turn, it feels. Having a look here on the technical side of things for that ASX trade as well, like we are sticking into this sort of pennant pattern, sitting on a bit of a longer term support, well, very much a long term support, coming all the way down from what were relatively high levels back at Q3 2020, but are now considered very, very low. Going to be interesting to see where we go from here. Obviously, all eyes on the US markets as we move ahead. So themes of the markets so far this week, really, we're looking at that increased COVID numbers that are coming through from Europe. How much is this going to affect the European economy? How much is this going to affect the world economy? Conversely, we're looking at the US very strongly, and we're sort of seeing, I suppose the risk we're seeing is more to a quicker upside over there. Inflation numbers, we've got that PCE data out later this week. We've got GDP data out as well. These are all, I think, about less than 48 hours away. And it's really leading to this disparity, which we were expecting to come at some point as the world moves out of a global pandemic and it becomes more regionalized. I think that's what we're seeing at the moment. It's very well reflected in currencies, as you can see here. I haven't even got a support line in on the euro at the moment, but euro has taken, and probably quite rightly so, a decent hit from these highs just at the end of October, around 116.50. We're now over 400 points lower, trading once again at day's lows around 112.35 at the moment. Probably looks a little bit better on this chart, which is the daily chart, gives us a little bit of a longer term view. That break through those levels, and once again, that's around about 115, the figure, a decent trade that came through there, and it has opened the way for longer moves. If you look here, there was a bit of congestion on the way up, way back in Q2 2020. Around those levels, we had a little bit of range trading for a few months that sort of went 112 the figure up to sort of 114 the figure. We're hitting those lows now, but I think a continued momentum from here, which things look set to go for, I think, could take us down sub that 110 level. Now, obviously, the converse side of that is if things turn a little bit in the US, and there's reasons we're getting, the market is getting long dollars, and quite rightly so. Expectations of further tapering, Jerome Powell back in for a second term in Joe Biden's leadership. So all these things are adding up for, I suppose that was not a great surprise, but it led to a continuation of the expectation that we've got that there may be some tapering and I suppose higher expectation of rate hikes quicker, sooner rather than later in the US. That's what's seen this move in the euro, and it's hit the euro in the crosses, and not surprised in the crosses as well. It's not just euro against the dollar, but Europe's looking like a bit of trouble. Austria in lockdown at the moment. Germany talking quite strongly about going into lockdown in the key Christmas period. I think that's if you've ever been to Germany, it's a fantastic place to go to approaching Christmas. Austria as well, of course. Fantastic place to go and get some skiing in. But not particularly great if you're stuck inside looking at the beautiful scenery while you can't go out. and massive for those economies as well. So something to definitely keep an eye on is how this pandemic, how the extra COVID cases hit. Does it spread to the rest of Europe? Is there a bit of contagion there? Does it then come back to hit us in the US and hit us in the Far East? Far East has sort of suffered quite considerably in recent times. So these are all the sort of fundamental factors that are really hitting us. So look at those central banks, look what central banks are talking about doing, look at how numbers are affecting it, and look at how COVID's affecting people. And that's going to give you fundamental direction. And your technicals are going to give you your entry and exit levels. Now, we had a big move here in dollar yen today. Large talk of 115, the figure options, big barriers there. Not many people expecting it to go, certainly in our session. I'll see if I can bring this move in for us. So pretty quiet, really. It was sort of meandering around these sort of levels earlier on. So 114.60, as you can see here, we can take that trend line out. That's completely irrelevant. So into the Asian day, we'd had a little sniff up towards 114. It came back down again. Not much going on, and then bang, from 114.80 up to pretty much 115.10, only in a few minutes. They took out those barriers. Don't know whether, like, maybe with the option desk that had the barriers, just like, okay, I've done enough with these, pulled the offers, and then it went topside. Big buy order, not too sure, but certainly the market was positioned to allow this to happen. We're now sitting 115.08, as you can see from there. And the topside route is open again. Yes, we had some highs back here a few days ago. High was sort of like 97. Then talk came through that there were sort of like some big 115 barriers as we moved up to these levels. That's our sort of main move in the currencies for the day. Once again, looking longer term in dollar yen, I'll come over here to my daily charts. We've had this. I've left this chart, like, it was a big break when it went through that 112 or 112 plus level. As you can see there, it was a very swift move all in a day. Like just over 112 up to 113 plus, and it's not really stopped since then. Fundamentals are pointing that way. US dollar, it's getting strength. The numbers are coming through. Expectation of rate hikes is pulling in. Tapering certainly pulling in a lot quicker. Obviously, the Bank of Japan, no expectation for them to be doing anything anytime soon. They haven't been doing it in the past, let alone any other central bank. So that's what's allowing the dollar yen to continue to move higher. Interesting fact as well that someone was talking to me about, the exporter interest out of Japan has sort of, it's decreased. Like the importers still high. Higher oil really does drive those Japanese importers to want to buy dollars, sell yen. And they will be buying on any dips. And the exporter caps that we used to have haven't got as much power as they used to. So something to keep in mind there. I've probably given you all reasons to buy dollar yen, but we are at, let's be honest, multi-year highs. So there could be a little bit of profit taking, a little bit of fading coming in, especially later in the week if those US numbers do disappoint to a certain extent. So once again, fantastic reasoning to both buy and sell. Dollar CAD's had a fantastic move. We've been talking about this for a while. Oil's come off a little bit, dollar's strengthened. We've sort of got a double whammy over the last couple of weeks. If you look at November, we sort of entered November down just around 123.50. We're now at 126.98, 127. Oh, 127 the figure. That's a big spread. We're moving up there. It's coming into a little bit of longer term resistance for me. It's poked above it if you look here on the daily chart. So I'll have to have a little play with those levels just to make sure that they're coinciding correctly. Generally, you wouldn't see the daily breaking higher than the hourly, but we'll have a little go. Yeah, on that chart, bang, it should open away to 129. Once again, for that move to occur, I feel we do need oil to continue on its recent sort of like drop off from high levels. Up to $85 a barrel. We've seen it tap out there a few times. We're back just north of $75 a barrel as well. Big break underneath that move. As I said at the start of the webcast, there's a lot of moving markets at the moment, and it's good for traders. Things are moving; they're moving percentages at a time. And if you can get in at the right time, follow the fundamentals, you're going to make some money. The other big mover that we had overnight was gold. Bitcoin, I'll just throw us out to our crypto friends over there. Bang, look, we're back down at $57,000 for a Bitcoin. wasn't too long ago at the beginning of the month, we were approaching 70,000, certainly 69,000. Let me just check if I can find a high there. There you go, high just shy of 69,000. We're back down under 57. That is moving like a steam train. The big move for us we saw, and this is on the daily charts, that is a big move down from 1850 to around about 1800. Did flush out some of those longs, not surprisingly. To me, we're back mid-range now. Need some direction, probably from the Fed, probably from the US data coming forward. I'll ignore that hourly chart because it looks just a bit of a mess at the moment. But there's plenty going on in the market. I think that's the key thing we're talking about. One of my favorites, and I keep coming back to the dollar Swissy, trading really well for the technicals, or for my technicals, I suppose, which is pretty much basic long-term, short-term trend line. Fantastic trend line here. It really respected it again, respected it fantastically down about 90. It is now up to my sort of more medium-term trend line resistance, just under 94 cents. If you see here on the hourly, it's right on there at the moment, but I think that was just on last night's high. I think we've got to look at this level here, which is, there we go, 93.35. Let's have another look down here, just above 93.60. I think if we can break above that, that will probably coincide with a further euro stretch to the downside. Then it opens up our way for a much higher move. Conversely, of course, and I do think this comes back to that US data later in the week, we could drop back into the range. So if you're playing the range, you've had a great trade off of these sort of like these bid levels here on the dailies, and then up to there. It wouldn't surprise me if there's a few longer term punters taking a little bit of profit. So just mentioning that those data points I was talking about, we do have some key data coming out tonight in Europe. We've got flash PMIs across the European sectors. So we've got German, we've got European, we've got UK, all flash PMI coming out. Now, they're probably a second stroke first tier number. I wouldn't say they're top first tier number. They're not a CPI or a GDP, but we will be watching those numbers very closely. If they do take a bit of a tap, especially the German one or the European one, then expect euro to get that extra knock again, because people are looking for excuses to sell it. Conversely, of course, if we do get a turnaround, we've got a short market, we could get an extended rally to the top side. I think in the majority, the fundamentals will stay for this week, or at least for the next 2 or 3 trading sessions, because as we move into Wednesday, we've got the RBNZ over here, down here in the Antipodes, which is another key one, because we're expecting a rate hike from New Zealand. Expect the Kiwi to remain bid if they do come through with that. I'm sure they shall. But the real key data for me later in the week, our Thursday morning, the rest of the world's Wednesday trading session, GDP numbers out of the US, and then the core PCE price index numbers as well. We do know the Fed keeps a close eye on those core PCE numbers. They're expected to come out with an increase of 0.4%. If we get a wild variance from that, expect the market to move and move fast. Similarly with the GDP, although I would say that takes a lesser stance than the core PCE. GDP quarter on quarter expected to come in at 2.2% increase. If it is wildly different from that as well, expect the markets to be off to the races. So plenty going on at the moment. We're hitting some interesting levels. We've broken some interesting levels. Things are happening. Volatility is coming. So I think there are plenty of opportunities coming up in the week for traders that are looking, and a lot of people have been waiting a long time to get these sort of like strong fundamentals pushing things through. So fingers crossed that we sort of get those circumstances coming and those trends continue. If you need anything from us here at FP Markets, please do not hesitate to give us a shout. Good luck with your trading, and we'll speak again soon. Thank you.